something is happening right now inside the Social Security system that a lot of people born before 1965 either don't fully know about or haven't taken action on yet. And if you are in that group, if you were born in 1964 or earlier, the window to get this right is closing. Not forever, but for some of this, sooner is a lot better than later. I've been watching this all year, and what I keep seeing is the same thing over and over. People who are absolutely entitled to more money, either missing out entirely or waiting around for something to fix itself automatically when it's not going to. So today, I'm going to walk you through exactly what is happening, who it affects, what you specifically need to check before July ends, and what you need to do if your records aren't right. No fluff, no scare tactics, just the real information with real numbers so you can make smart decisions about your retirement income. And welcome. If this is your first time watching Prime Move Guide, this channel is built for people who are serious about protecting and maximizing what they've earned in retirement. We do this every week. Straight talk, real data, no runaround. If that's what you're looking for, hit subscribe right now so you never miss a video that could affect your monthly check. It takes 1 second and it matters. Now, let's get into what's actually going on. We are living through one of the most complicated years in Social Security's history. In the last 18 months alone, a major new law was passed that eliminated rules that had been cutting retirees' checks for decades. The annual benefit increase came in at 2.8% for all 71 million recipients. A brand new senior tax deduction was created that could zero out federal income taxes on Social Security for a majority of beneficiaries. And a sweeping change to how payments are delivered was quietly implemented that some people are only now realizing applies to them. On top of that, scams impersonating the Social Security Administration have surged to some of the highest levels ever recorded. Any one of those things by itself would be enough to pay attention to. All of them happening at the same time, you need to be looking at your account right now. And if you were born before 1965, several of these changes have a direct and specific impact on you that's different from what younger retirees are dealing with. Let's start with the change that has already put billions of dollars into people's bank accounts, and which still has some outstanding cases that haven't been resolved. In January 2025, the Social Security Fairness Act was signed into law. And this is the single largest change to Social Security in decades. Here's what it did. For a long time, there were two rules built into Social Security law called the Windfall Elimination Provision and the Government Pension Offset. These were rules that reduced, sometimes dramatically, the Social Security benefits of people who also received a pension from a job that didn't withhold Social Security taxes. We're talking about a lot of retirees born before 1965, teachers who retired from public schools in states like California, Illinois, Texas, Ohio, and Massachusetts, firefighters, police officers, federal employees who were part of the old civil service retirement system, people who worked in certain state and local government positions throughout their careers. For these folks, the rules worked like this. If you spent part of your career in a non-covered job and you also had Social Security credits from other work, the government would reduce your Social Security check using a formula that could cut it by hundreds of dollars a month. And if you were a spouse or surviving spouse trying to collect on your husband's or wife's record, the government pension offset could eliminate that benefit almost entirely. These were rules that had been in place since the late 1970s and 1980s. Millions of people had simply accepted them as permanent features of the system. They're gone now. The Social Security Fairness Act wiped both of them out, retroactive to January 2024. And the Social Security Administration moved faster than almost anyone expected. By July 2025, they had already completed sending out more than 3.1 million payments, totaling $17 billion, to eligible beneficiaries, 5 months ahead of their own projected timeline. The average lump sum retroactive payment was around $6,710. Some people received significantly more. That money covered the increased benefit amount all the way back to January 2024, delivered as a direct deposit with no advance warning for many people. Millions of retirees checked their bank account and just saw the money there. But here's where it gets important specifically for you watching this right now. Not everyone has been taken care of yet. There are still outstanding complex cases in the system. Some of these involve retirees who were affected by WEP or GPO, but whose records couldn't be processed automatically. Situations where the SSA didn't yet have confirming data from a state pension fund, where the case involved unusual circumstances, or where it touched on spousal or survivor benefits that required extra review. A report from February 2026 noted that some surviving and divorced spouses of public sector workers had still not received their full adjustments, and that a group of senators had written to the SSA urging them to ensure these cases were resolved completely. There's also a group of people who never applied for benefits in the first place because of the old rules. Think about this for a moment. If you were a surviving spouse whose late husband or wife worked in government, and you knew the government pension offset was going to take away most of your spousal benefit anyway, you may have simply never applied. Why deal with the paperwork and the wait for something that was going to get wiped out anyway? That decision made complete sense at the time. But now the rule is gone. If that describes you or someone you know, you may need to file a new application to start collecting benefits you were always entitled to but never claimed. The same applies to people who worked in covered and non-covered jobs and made decisions about when to claim based on what they knew then. The calculation has changed. The benefit you're entitled to now may be substantially different from what you were getting before, or what you assumed you'd be getting if you hadn't applied yet. Here's what you need to do today. Go to ssa.gov/myaccount and log into your personal account. If you don't have one, you can create one. It's free. It takes a few minutes, and it gives you 24/7 access to your benefit information, your earnings record, your payment history, and your COLA notices. Once you're logged in, check your current benefit amount. If you were receiving benefits that were reduced by WEP or GPO before January 2024, you should see an updated higher amount. If the number hasn't moved, or if you were never receiving benefits and think you might now qualify, call the SSA at 1-800-7721213 or visit ssa.gov/apply. Don't wait on this. Every month you're getting the wrong amount is money you're losing permanently unless it's corrected. Now, the second thing to understand is what changed about your earnings record and why this matters more in 2026 than most people realize. Your Social Security benefit is calculated using your 35 highest earning years, adjusted for inflation. That's the baseline. And the formula the SSA uses was locked in based on your earnings history as it exists in their records. If something is missing from those records, a year of work that didn't get credited properly, an earnings amount that was reported incorrectly, a name mismatch because you got married or divorced and changed your name, that error directly reduces the benefit you receive, potentially for the rest of your life. Here's something that most people don't know. Errors in Social Security earnings records are more common than you'd expect. They happen because of employer reporting mistakes, IRS and SSA data transfer delays, name mismatches, Social Security number discrepancies, and a dozen other technical reasons that have nothing to do with anything you did wrong. According to financial analysts and Social Security experts who track this issue, one of the most common problems appearing in 2026 is what's being called a zero year. A year of legitimate work showing up on your earnings record as $0 in earnings. This can happen when IRS and SSA data gets out of sync, particularly for 2024 earnings that may not have fully transferred into the SSA's records yet. If you worked in 2024 or 2025 to supplement your retirement income, that work should be updating your benefit calculation. If those years show as 0 and they're among your higher earning years, your monthly check will be lower than it should be. The time limit for correcting most earnings errors is not indefinite. Generally, the SSA allows corrections for up to 3 years, 3 months, and 15 days after the end of the taxable year in which the error occurred. There are exceptions for fraud, clerical mistakes, and employer reporting failures, but the standard window means that if you have errors from older work years, they become harder to fix the longer you wait. And while documentation from the IRS and employer W-2 records can sometimes be recovered going back to 1978, the process of pulling that information can take 90 to 120 days, sometimes longer. If you're in a situation where an error is costing you money every month, you want to start that correction process as soon as possible. The SSA's statement is that they encourage all beneficiaries to review their earnings record annually. For workers age 60 and older who don't have an online My Social Security account, the SSA mails paper statements 3 months before your birthday. But most people have moved to online accounts, and the SSA itself recommends that as the better option because it's faster, more secure, and you can access it anytime. If you haven't logged into your account recently, right now is the time to go in, pull up your full earnings history year by year, and compare it to your own records, your W-2s, your tax returns, your pay stubs. If you find a year that's wrong or missing, you can begin the correction process online by calling 1-800-772-1213 or by going in person to your local SSA field office. If you find a discrepancy, here's the process. You'll file a request for correction of earnings record using Form SSA 7008. You'll attach documentation, W-2s, tax returns, or pay stubs for the affected year. You submit it either online, by mail, or in person. The SSA then researches the error, cross-references with IRS data and employer records, and corrects the record if the evidence supports it. For straightforward errors with documentation, this can sometimes be resolved in a few months. For more complex corrections involving decades-old records or unusual circumstances, it can take considerably longer, which is why acting now, while summer is still here, is better than waiting until fall. Here's the next thing that could be affecting your check, and that people born before 1965 need to know about specifically. And this one is a practical, unglamorous issue that is causing real payment disruptions for real people right now. The federal government completed a major transition in 2025 that required all Social Security payments to move to electronic delivery. Paper checks for the vast majority of recipients are gone. An executive order signed in March 2025 mandated that all federal benefit payments be electronic, and the SSA confirmed earlier this year that they are completing that transition for the remaining holdouts. If you are still receiving a paper check for your Social Security payment, you need to act on this. You'll need to set up either direct deposit to your bank account or enroll in a Direct Express prepaid debit card. The SSA website, SSA.gov, gives you options for setting this up, and you can also call 1-800-77-21213 for help. But even for people who already have direct deposit set up, there are issues that are catching people off guard in 2026. One of them has to do with bank account changes. Several major regional banks have gone through mergers and acquisitions over the past couple of years, resulting in routing number changes. If your bank changed its routing number and you didn't update the SSA, your payment can bounce. And when a payment bounces, the SSA doesn't automatically try again next month. They suspend your payment and put your file in a hold status until you verify the correct account information. People find out about this when the 3rd of the month or the relevant Wednesday comes and goes with nothing in their account, and they have to scramble to get it resolved. There's also an important update to the Direct Express program specifically. If you receive your Social Security payment on a Direct Express prepaid debit card, you need to know that the program has a new bank this summer. Fifth Third Bank took over as the financial agent for the Direct Express program after merging with Comerica Bank, which had been managing the program for years. That means 3.6 million beneficiaries enrolled in Direct Express will be receiving new debit cards this summer. If you are among those 3.6 million people, watch your mail for the new card, activate it when it arrives, and make sure your old card is deactivated. Missing this transition could mean you go to use your card and find it declined, which is a stressful situation nobody needs to be dealing with. The SSA's stronger identity verification requirements for direct deposit changes are also worth understanding. If you need to update your banking information, the agency now has tighter protocols in place specifically because of the surge in Social Security fraud. Changing your direct deposit information online through your My Social Security account is processed faster than by phone, and phone changes are subject to mandatory hold periods. If you need to make a banking change, the best path is online if you can, or in person at a field office with valid ID if you can't. The SSA moved to stronger identity proofing procedures for both new benefit applications and direct deposit changes. And that verification step is now a standard part of the process. The practical takeaway here is to log into your My Social Security account, scroll to your direct deposit and payment information, and confirm that the bank account on file is correct and current. If you've changed banks, had a bank merger, or closed and reopened accounts in the last year or two, verify that the routing and account numbers the SSA has on file match your current active account. Now let's talk about something that has become one of the most serious financial threats to retirees in 2026, and it connects directly to everything we've been discussing. Because every time the Social Security Administration is in the news, every time there's a big law change, a payment update, a new program, a deadline, the scammers follow immediately. In 2025, the Federal Trade Commission received more than 330,000 complaints involving government impersonation, a 25% increase over the prior year. The Social Security Administration is the most frequently impersonated federal agency in the country. And in 2026, the SSA's own Office of the Inspector General issued a specific warning about a sharp uptick in fraudulent emails claiming that your Social Security statement is ready to download. These emails look real. They use official-looking logos and formatting. They have your name, sometimes your partial information. But the links in them don't go to the SSA. They go to fake websites designed to steal your Social Security number, your login credentials, and your banking information. Reported fraud losses among adults 60 and older reached $2.4 billion in 2024. And that's just what was reported. The FTC estimates the actual losses, including unreported cases, are far higher. Scammers are no longer running clumsy operations. They use AI tools to make their emails and phone calls sound legitimate. They use spoofed caller ID so your phone shows the actual Social Security Administration phone number when they call. They read your name naturally. They cite your last payment amount. They create a sense of urgency that makes it feel like you need to act right now before something bad happens to your benefits. The SSA and OIG have laid out 4 clear red flags to recognize a scam. First, they will never contact you out of the blue and demand immediate action. Second, they will never ask you to pay a fee in gift cards, wire transfers, cash, or cryptocurrency to keep your benefits active or fix a problem. Third, they will never threaten to suspend your Social Security number or have you arrested over the phone. A Social Security number cannot be suspended. Fourth, they will never tell you to keep the conversation secret or pressure you to stay on the line without hanging up. The real SSA will send you official mail if there's a genuine issue with your account. They will send COLA notices to your My Social Security online account or by postal mail. They will contact you about retroactive payments through mail or through your registered account. They are not going to text you a link, call you about a deposit you need to verify, or email you asking you to confirm your direct deposit banking number in response to a message you weren't expecting. If you get any unexpected communication claiming to be from the Social Security Administration and asking for personal information or payment, hang up the phone, delete the email, and go directly to ssa.gov.edu, type that address yourself, don't click a link, and log into your account to check on your actual benefit status there. You can also report suspected scams to the SSA's Office of the Inspector General at 1-800-269-0271 or online at oig.ssa.gov. Reporting these scams helps the agency track and shut down the operations behind them. Let's put all of this together and make it specific to what you need to do before July ends. If you were born in 1964 or earlier, you are already at or past the age at which Social Security changes hit you directly. Whether you're already receiving benefits or are in the process of deciding when to claim, the ground has shifted significantly in the past 18 months, and you need to make sure your account reflects reality. The first thing is to check whether you are, or were, among the people affected by the Social Security Fairness Act. If you spent any part of your career in a job that didn't withhold Social Security taxes, or if you are or were married to someone who did, log into your My Social Security account and look at your benefit amount. If you're already receiving benefits and the amount didn't go up since early 2025, you need to follow up. If you never applied for benefits because you assumed WEP or GPO would reduce them to almost nothing, it's time to apply now because those rules are gone. The number to call is 1-800-772-1213, and the website is ssa.gov/apply. The second thing is to pull up your full earnings history in your My Social Security account and review it year by year. Take your W-2 forms or your old tax returns and compare them to what the SSA shows. Look for any years where the number seems too low or any years that show zero when you know you were working. If you find something that doesn't look right, gather your documentation and start the correction process now. The longer you wait, the harder some of those corrections become to make. The third thing is to verify your payment delivery information. If you're still getting a paper check, you need to transition to electronic payment. If you have direct deposit set up, confirm that the banking information the SSA has on file is current and correct. If you're on the Direct Express card program, watch your mail for the new Fifth Third Bank card arriving this summer and make sure you activate it when it comes. The fourth thing is to understand the new tax picture. If you're 65 or older, there is a new $6,000 tax deduction available to you under the One Big Beautiful Bill Act, signed in July 2025. It runs through 2028. For married couples where both spouses are 65 or older, that's $12,000. This deduction stacks on top of the standard deduction and your existing senior add-on, and it may reduce or eliminate the federal taxes you pay on your Social Security income. Make sure whoever handles your taxes knows about it, and if you do your own taxes through software, confirm the deduction is being applied. A $6,000 deduction is not something you want to accidentally miss. And the fifth thing, sharpen your radar against scams. Every change we've talked about today is real and legitimate, but scammers know these same changes are happening and they're using them as hooks. You're going to see emails about your Fairness Act payment. You're going to get calls about verifying your new direct deposit information. You're going to see texts telling you your account needs to be updated before a deadline. None of those things are coming from the real SSA. If you didn't initiate the contact, hang up and go to ssa.gov yourself. There's one more piece of context I want to give you before we close, and it's about timing and why summer specifically matters here. A lot of the outstanding cases from the Social Security Fairness Act, the complex ones, the spousal cases, the ones that couldn't be processed automatically, have been working through the system over the past several months. The SSA has been updating records and reaching out to beneficiaries. But there are still cases where the beneficiary needs to follow up themselves because the SSA is waiting on information or because the beneficiary never knew they were eligible in the first place. In terms of your earnings record, the SSA's own guidance is that if you want to verify that your 2024 earnings were credited correctly, you should check your record and confirm the number is accurate. Corrections for earnings from recent years are easier and faster than corrections for earnings from decades ago, but they still take time to process. If you find an error now, submitting the correction in July gives you a much better chance of having it resolved before the end of the year than if you wait until fall or winter. And for the Direct Express cardholders, the 3.6 million people whose cards are changing this summer because of the switch from Comerica to Fifth Third Bank, the transition is happening now through this summer. If you are in that group and you don't receive your new card, or if it arrives and you ignore it or don't activate it, you could find yourself without access to your payment. That's not a situation you want to stumble into. The SSA processes payments for nearly 71 million Americans. The system is large and generally reliable, but it does not catch every individual error automatically, and it cannot take action on your behalf when you haven't yet applied. The onus is on you to review your records, correct mistakes, and make sure the information the agency has is current and accurate. That's not the most exciting thing to spend a Saturday afternoon doing, but it is genuinely one of the most financially valuable things you can do for yourself. Here's the bottom line on everything we covered today. If you were born before 1965 and you spent any part of your career in a public sector job that didn't pay into Social Security, or if you're married to someone who did, I'd check your benefit right now. The rules that were cutting your check are gone, and you may have money you're not receiving. If your benefit hasn't been updated, make the call. Review your earnings record. Look for zeros or underreported years. Gather your W-2s and tax returns and compare what the SSA has on file. Correct any errors you find, and do it before the easy correction window closes on older years. Verify your payment delivery. Confirm your direct deposit details are current. If you're on Direct Express, watch for your new Fifth Third Bank card. Claim the $6,000 senior tax deduction if you're 65 or older. Make sure it's being applied to your tax return. And stay sharp on scams. The SSA will never call you out of the blue demanding immediate action, payment, or personal information. If that happens, hang up. Go directly to ssa.gov. If this video helped you today, I want to ask you for something. Hit the like button right now. It costs you nothing, and it helps this video reach other retirees who are in the same boat and don't know it yet. There is somebody watching right now who has a brother or sister who spent 30 years as a school teacher and has no idea the rules that were cutting their check are completely gone. Forward this video to them. Drop it in a family group chat. Post it on Facebook. That information could be worth hundreds of dollars a month to somebody you care about. And drop a comment below. Have you seen your benefit update from the Social Security Fairness Act? Are you still waiting? Did you find anything off in your earnings record when you went and checked? This community learns from each other's experience, and your story might be exactly the thing that gets someone else moving on this before the summer runs out.